Hello, my dear long-term investors. This is Bhuvi. Today we are going to talk about the results of TMB Bank, which is a continuation of the part 1 video which I made, I think, in Saturday. So let's get into the video and welcoming you to my channel. So the Q3 revenue growth of TMB Bank is at 18% year on year and 1% quarter on quarter, and the revenue is 1387 crore. And their expenses, I mean the money they had spent is 32% year on year grown and 1% quarter on quarter, which is at 1016 crore. And their net interest income, which is the income they were received as the interest and the expense they were expended as interest. So like they have to give the depositors the interest. The difference between these two is called net interest income, which stands at 5,370 crore. Sorry for the mistake. That's 537 crore. So their operating profits have declined 9% year on year, and the operating profit is at 370 crores. The net profit just climbed 1% year on year from 279 crore to 284 crore, and raised 3% quarter on quarter from 273 crore to 284 crore in this quarter 3 of financial year 24. Their NPA, non-performing asset, which is the interest where they are not able to collect from the assets which are a loan they availed to someone for more than 90 days, is called as NPAs. So the NPAs have grown 9% year on year and grown 8% quarter on quarter. So the deposits, the deposit collection have grown minus 3% year on year, which is decline, and 7% quarter on quarter. And advances, the amount of money they are providing as a loan to public, and mostly they are concentrated in retail, agriculture and MSME sector, which is grown 2% year on year and 10% year on year, quarter on quarter. So as a percentage of the gross NPA to the assets, which stands at 1.69%, and at September, the previous quarter, it stands at 1.7%, and in December quarter, which is the same quarter of the previous year, which is at 1.7%, which is flat almost. And net NPA, which is the NPA after provisioning for the bad loans, that is called NPA, net NPA. It's at 0.98% in December Q3 FY24, and the previous quarter it's at 0.99, and in December quarter of financial year 23 it is at 0.75. And the operating profit margin, which is at 26.7%, and in the previous year which is at 26.74. The net profit is at 20.5%, and the previous quarter it's at 20.03%, and the corresponding quarter of previous year, which is at 23.85%, which is a considerable amount for a bank to earn as a percentage of their revenue. One more thing, they got a considerable, the flat profit, which is totally attributable to the the decline in provisions, because in the previous quarter they made a 23.3 crore as a provision, but compared to that, this quarter they just allocated 2.37 crore as a provision, which is just 10% of the previous quarter's amount. Because previous quarter they had a massive NPA, a big account got into NPA, which is attributed to the textile industry, because a slowdown in the macroeconomical terms. Next, I'm going to talk about the earnings call, which I came over and I read. I think almost it contained 15 pages, and I highlighted some main points here, so I'm going to say about it. So their net worth has increased from 6,741 crore to 7,668 crore. I mean their book value per share has increased considerably from 435 rupees to 484 rupees. Book value is nothing but if you liquidated a company, how much of money will the shareholder will be provided. That's a book value. It is important for an financial institution because all they the matter of business is in cash, only cash. So we have to consider it mainly in financial companies, right? So their EPS, which is at 17.95 in this quarter, and have grown from year on year basis at from 7.27. So the return on asset, how much the asset yielding to them, the ratio is called return on asset, which is at 1.93 versus 1.89 in the previous year. So their ROE, return on equity, how much of the money they are getting by using the shareholders' money. So that is called ROE, which is at 15.1%. From 15.01% from a previous year. So the net interest margin, which is the difference between the amount of money they are spending versus the the amount of money they are getting. So let's say I'm providing loan for a person at 8% interest, and I'm giving interest to my depositors at 4%. The 4% difference is my profit. I'll pocket the difference. So that's the net interest margin. So the net interest margin is at 4.08, and which is 2 basis point decline from 4.1% a year ago. Credit cost is at 0.06 in this quarter from 0.83 in the previous one. Credit cost is nothing but how much of money I'm spending to collect the interest. Their stressed asset ratio, which is the assets they are very difficult at collecting the interest income, is called stressed asset, which is 3.08 of total assets, and from a 4% from the previous quarter. The slippage ratio means the percentage of asset have gotten into the NPA. So if slippage ratio today, this quarter is 0.21 versus 0.82 in the September quarter, because as I said, the previous quarter they got 350 plus crores of assets get into NPA from a single account. 350 crores is considerable amount for the small bank. So that's why the slippage ratio was high in the September quarter, but that drastically declined in this quarter. So the net interest income, as I already said, is at 537 crore and profit is 284 crore. In my terms of valuation, its book value is at 484 rupee, and the share is now currently trading at 494 rupee. It's just above the book value. I would say this is a at a one time the book value, which is the book value is at 1. Let's say for the peer comparison, let's don't take the ICICI and HDFC because they are all giants. So let's take the peer as the same small regional banks are like, let's say Federal Bank, which is trading at 120 rupees, but the book value is 40. It's trading 3 times the book value. I don't think that's a value buy. It's a good company, but it's not the value to my money. As Warren Buffett said, price is what you pay, value is what you get. The one drawback is the ownership is in tussle, but the management is at a great state. This bank will grow at least 12% minimum per year in its book value. So the decision is yours. The ROE also at 15.2%, 15.1%. Yes, once more I'm saying the caveat is the management, I mean the ownership tussle. The investor has to have to maintain the patience, or else don't even touch this stock with a 10-foot pole. The case might solve in 1 year, 2 year, 3 year, 5 year, 10 year, 20 year. But I'm buying something which is at cheap and at a great quality. That's it. And hope today's video will be informative. And thanks for watching till end. Please like, share and subscribe. If you share this video to your friends and family so they can know about the magical world of market.